Okay guys, Saturday the 17th of February, so let's have a look at our US indexes. So as always, we'll start on the S&P 500 and then we'll move on to the NASDAQ. The zones have been left on the charts from last week's Sunday analysis, so the zones that the market actually passed through. And then what we'll do is we will have a look at both of these markets for the trading week ahead. So with the S&P 500 first of all, and the NASDAQ, we were going over how we wanted to be a little bit more cautious on this market after such violent price action movements. We'd had a very, very strong downward movement, and the market was, making around about 4 or 5 times the daily movement sizes than what it normally does. So obviously you want to be cautious, you want to look to protect your capital. Sometimes if you are finding that when a market does something like this, you're unable to trade effectively, you just want to stop trading. You just want to give it a rest, wait for the market to come back down again. The markets are always going to be there. There's nothing wrong with taking a little bit of a break if you find it more difficult. Otherwise, you want to adjust your trading plan so it suits, and then just trade as normal. So with the S&P, what we're looking at. So resistance level right here, tested on Monday with the rejection coming in. Then on the Tuesday, all the way back down to test at our support level. Shot right back up into our resistance area. Wednesday all the way down. Now really for me this is actually testing below this zone into another little zone down here, but then we find a very, very strong move up. And then what we went over in our analysis last week also was if we started breaking up above this 2000, really the 2700 level, we could then look for pullbacks and stronger bullish stronger bullish retrace, all the way up to these areas right here, both of our zones. What happened on Thursday? Very strong move up. Rejection came in where? At our zone at 2760. So coming into next week. So this is a little bit similar actually to the Australian dollar US dollar video that I did last week. Australian dollar US dollar has been in a very strong downtrend. However, coming into last week, the market had made a move like this. So let's get rid of this one. We made a strong bounce, we'd rejected at key resistance, and then we made a pullback. And what we went over was how although the market was in a long-term downtrend, the pullback level was still a good area to start looking for potential bullish bounces. Now the reason is, even when a market is in a long-term downtrend, when you get the pullback like this, there's still going to be traders looking at these potential levels for what they are looking at as the potential start of a bullish trend. It doesn't mean the bullish trend is going to start, but as day traders, we are looking for really daily movements, what the market's going to do day to day. So we really want to know where the majority of traders are going to be thinking, or what they're going to be thinking, because we can capitalize on shorter term movements. And why I'm saying this is because coming into this market this week, obviously, let's get this zoomed out. S&P, huge uptrend. Yeah, it's been in a huge uptrend. However, we've had this very strong downward movement. The retracement has been all bullish. Yeah, no bearish days, apart from a doji candle coming in on Friday. So let's have a look at where we've pulled back to. We've pulled back to the 61.8% retracement level using the Fibonacci tool. Still a good area to look for resistance and the bears stepping back in coming into next week. And really, I would also include this whole section up above as good resistance. We've got this area here, and then we've got this whole section right here, which is resistance. But really, if we start breaking back above here, the retest we'd be looking at would only be for potentially a very large double top. But certainly coming into next week, these levels sitting at this previous level of structure are good to watch for potential bearish reactions. Let me just get rid of this. Now really, I don't want to adjust either of these zones. They are sitting pretty well. They've also both reacted pretty well. And what I'm looking at also coming into next week is, actually sorry, last week this was sitting up here like this. And you can see the market coming down. It's basically closed in those levels. Now we want to bring this one down to take into account this spike up from the 7th of February, right here. On the way back up, once again, there's been very little structure made for this wave back up. And what it means is if we start breaking down below this level, again, coming into next week, it's worthwhile looking for the bears stepping in and potential corrections down toward 7203 to 7205. Good resistance and good resistance. If we're continuing to see those failures, it's worthwhile looking for those potential bearish movements back down toward the zone below. Now the zone below, we want to just bring up ever so slightly. If we can get rid of the rectangle, if we can get the line right here up to around about 2,700, so the round number. Don't want to move this one too much. We can bring it up ever so slightly to around about 2,687 right here. So if we do see the corrections coming in, this is really where the support starts once again, to look for potential bullish bounces once again. And then this zone down below also, very good level of potential support. Down below there, we want to create another zone at 2,627 down to 2,620. So taking into account the spike down, even the Sunday price action right here, and the close and the open right here, it's giving us clues that buyers and sellers are interested at this level. This would be last real key support, and then if we started breaking down below there, once again, we'd be looking for potential moves down toward 2,596 to 2,590. Okay, so up above this level, really it's this whole section right here, which is the key areas of support and resistance. Now we've got this spike down from Tuesday the 16th of January, but really it's not giving us a lot of evidence as to potential support and resistance levels. If anything, you'd have it sitting at 2,780 down to 2,767. I'm going to say that's a more minor level. We may see very strong reactions coming in there. The reason it's more minor for me is we just don't have enough evidence as yet. We've only had this test here, then the open of this candle, we shoot right up, and then we just take off once again. So I'm going to say this level is more minor. Up above there, we start getting into 2,790, excuse me, all the way up to 2,797. So for me, this is a good level of resistance once again. And really, if we start breaking above this area, it's worthwhile. So the 2,745 to 2,760. It's worthwhile starting to look for those bullish bounces once again. Certainly up into 2,767, potentially all the way up into 2,780 and higher. We would then start looking for resistance. Up above there, again, this is a strong level of resistance. 2,813 to 2,806, right here. Right here. So for next week, those are the main areas on the S&P 500. Very quick recap. This remains key resistance coming into next week. If we're looking for weakness, if we start failing at this level once again, those moves down toward the 2,700 area, where we start to get back into support, look for bounces. Down below, we also have levels of support. It's only if we start breaking down below here that I'd then start looking for the move down toward, really I'd expect to see 2,590. We have the round number 2,600, but yeah, 2,600 to 2,590 certainly. Up above, more minor for me at present, this level of resistance. If we're breaking up above, we can look for bullish bounces. Key resistance and key resistance at these two areas right here. Okay guys, now let's move on to the NASDAQ. Okay guys, let's do the exact same thing for the NASDAQ. So last week, let's have a quick look at our zones. What we went over was how if we started to break up above this level right here, we could then expect the stronger correction on the NASDAQ at least up to the round number 2,600. And then we had our zone up above at 6,640 to 6,660. Monday, we press up above this zone right here. What do we do on Tuesday? We come back down. Don't quite test at the exact level at 6,466. On the Wednesday, we come down, we test at that level of support, and we rocket all the way up past our 6,600 and into our zones up above. Where does the market stop and find a little bit of resistance? At our zone at 6,700, the round number. Coming into Thursday, we break up once again, and then what we can see, market stops at our 6,840 level. On the Friday, we try to break up, we come back down. Where have we closed within? our sloping support and resistance, and our 766 to 791 level. So coming into next week on this market, relatively neutral on the NASDAQ at present. We've had this strong wave down, we've then pressed all the way back up, and we are testing at these levels of resistance. We're also testing at this sloping support and resistance line. If we just zoom out a little bit, we got the evidence from our touch right here, a touch right here, as the market started to test here, as it started to crawl along this sloping support line right here. In all honesty, we don't really need it on the chart anymore. We use this as we're starting to break up here, and then as we started to do the bullish rally. I'm fairly happy to get rid of it at present. So, first thing is really the zones going into next week are pretty much the same. Just want to look. And now that we have broken up like this through this area here, there is the argument of bringing this down to 6620 to 6660 right here. Now taking into account that spike up. The reason being, if we do pull back, this is a good shelf of potential support. With the previous price action, you want to include that spike up just in case the market breaks down, tests, before the bulls step back in once again. So, on pullbacks, really, this is a good level of support. That's 6620 to 6660. And then if we start breaking back down below that level, then I would be happy to look for stronger bearish movements back down toward at least 6570, which is a more minor level of support and resistance, down to 6560 right here. But really the key levels of support, they remain down at 6530 to 6500, 6466 to 6447, both of these areas right here. So coming into next week, if we do see the pullback, good level of support. If we break through, I'd then be happy to look for the stronger movement down into 6560, 6570. Now up above these, well, first of all, this whole section right here is key on the NASDAQ, as really is this little section right here on the NASDAQ. They're both very strong levels of support and resistance. So really, let's take this up a little bit. 6920. Really, let's make this into, let's have a look. So 6920 to 6880. It is really this whole section right here. Really, you could make it 6880 to 6895, and then 6905, 6920. But really, for me, that is one strong level of support and resistance. If we do see the market breaking up, it's a really good level to look for potential weakness coming into the market, as is this level just up above there at really 6983 all the way down toward 6965 right here. Now in between this level here and really these levels down here, I'm a little bit more neutral on the NASDAQ. Pretty much where these zones are sitting, what we can do is look at it in terms of almost a ladder. We go over this sometimes with these videos. Let's move this up a little bit. Now that we've had the break up to 6845. If we're breaking up above this level, it's good for looking for support and the bounce into the next zone. Whilst testing down below, it's good resistance, looking for moves back down into this level. If we're breaking down below this zone right here, good resistance, looking for the move down. Also, this is support, sorry. This level here, this is where it gets a little bit more tightly packed. So really coming down to these levels, I'd be more focused on potential support and potential support. And really at this level also potential support on the way on the pullbacks. If we then start to break down below this level and then start to turn a little bit more bearish, be happy to look for those moves down into this whole section of price action right here. That's pretty much everything for the NASDAQ. So a quick recap. Very key resistance is up above at both of these levels. If we see the market pressing up, more than happy to look for that weakness and the sell positions. This remains resistance, breaks above, we can look for the bounces higher up into this zone. Support, looking for bounces to the next zone. Down below, resistance, looking for the moves down into the 6740 to 6715. And then really, down here, I want to be a little bit more cautious because we've got the first swing right here, and then we've got the second swing right here. Very, very close together. So I'd rather just be a little bit cautious, look for potential bullish bounces at all three of these zones here. If there's no bullish bounces, just sit out and wait until we start to see the breakdown below this level. Breakdown below this level, I'd then be happy to look for resistance and moves down toward 6570. And then we have really key support at 6530 to 6500, 6466 to 6447 right here and right here. Okay guys, so that is everything for this week. As always, I hope that was helpful. Hope you all have a good trading week next week. I'm James Orr and thank you.